Happy Tuesday, everybody. I hope you had a great long weekend. Now, on to the short week. And it'll be quiet compared to what we've seen in the past few weeks, but don't count on too much. Today is September 5th, 2023, and this is your Labor Day delayed Tuesday market update, your first one for the month of September. As we do here every week, usually on Monday, we'll review last week's market action and we'll preview what we'll see this week. Last week was still digesting the Jackson Hole speech as it kicked into gear on Monday. Euro eco data was bearish, but the Chinese stimulus was back in play, this time to help the first-time homebuyer and investor, both things that have been in focus recently. As yields pulled back after a strong two-year Treasury auction, the markets rebounded again with high tech and high valuation leading the way into the close. Even as the month winds down, volumes are lower as the last of summer vacation keep the trading desk pretty empty. Remember, light volume can cause more exaggerated moves than usual. Recall that I've been pointing out as a few items as we go along that scream out as abnormal. Yes, the Vietnamese EV company still in the news, but also the major upgrades and price target changes. Monday, we saw Piper Sandler raise the target on Broadcom from 830 to 935. That's a 10% plus change. Overall, that's just in one day. Overall for the day, the Dow and the S&P were up about 2/3 of 1%. NASDAQ was up almost 1%. And if you think you're getting seasick with this market moves, it's better than usual. Into last week, the S&P has not moved more than 2% in a single trading day in over 6 months. Now, that does not usually, certainly doesn't seem that way, but that's how it's been. Markets opened flat on Tuesday, but that was short-lived as the markets went into orbit mid-morning once JOLTS numbers were out, and they fell to a 2-year plus low, and also showed last month's number revised down. Adding consumer confidence coming in worse than expected, and here we are. Bad news is good, in fact, really good. Another strong Treasury auction, this time 7 years, and the market pushed higher into the close. Just for some perspective, to be a bit balanced, the soft landing crew does not have a lot of history on its side, especially in the markets in 2000 and again 2006. A quick recap, the Fed raised rates quickly, though not as quickly as this time, and labor markets finally rolled over after a wait. April 2000, jobless claims finally began to rise, and rise they did, and the economy slowed. Jobless claims went from 266,000 in April to 490,000 in October, and the S&P went from 1,500 to 1089, down more than 30%. 2006, rate hikes. February 2006, jobless claims were 288,000. March 2009, they were up to 660,000. S&P down from 1,280 to 787, down nearly 50%. I'm not suggesting this will happen again. I'm only bringing some balance to a loud voice that says the Fed will get it right. They may, but they also may not. And just because their cracks are not showing yet does not mean that they will not show. All of this is important to remember as the Dow was up almost 1%, S&P up to close 1.5%, and the NASDAQ was up 1.75%. If you think the Fed is clear on their direction, just note that Jay Powell used the following to describe monetary policy at this time. We are navigating by the stars under cloudy skies. I don't know about you, but that just breeds confidence, no? Stocks pressed higher on Wednesday as they opened a bit higher on the latest eco news. ADP employment report reinforcing the labor market is easing, and that is what the Fed wants. Not a lot of other news to push things around, so the pain trade was up. Markets did not finish too strong, but higher nonetheless. Markets continue to price bad news as good news, and as I've told you, beyond the short term, this is usually not the case. Overall, the Dow was up slightly, S&P up about 1/3 of 1%, the NASDAQ was up about 1/2 of 1%. If you're having a hard time staying focused on this video, I'll just blame the Adderall shortage. As kids go back to school, the ADHD drug is in short supply with 97% of pharmacists saying they don't have enough. Final trading day of the month, August 31st, was Thursday, and as we move into September, I would be remiss if I didn't at least touch on the seasonality of that month. Let's wrap up August 1st. Markets did not move much, even though they got PCE data, the Fed's favorite. So some say, and it was keeping in with the soft landing crew. Maybe it's priced in, as I've been talking about. Markets did move up most of the day. Lunchtime brought some selling, and then as markets geared up for the Friday jobs numbers, markets went negative, then mostly closed near the flat line. Dow was down 1/2 of 1%, S&P slightly negative, and the NASDAQ was slightly positive. Just to put a fork into August, the S&P was down about 1.5% for the month, breaking a 5-month streak. The Dow and the NASDAQ both down about 2% of the month. Remember the worst performer as we started the year? Energy. Second straight month leading the sector pack. Actually, the only one higher this month, up a bit over 1.75%. Let's talk September real quick, then we'll move on. Stocks opened higher on Friday as the Bulls got the report of 187,000 new jobs for the month, higher than expected, but subtract the downward revision, sprinkle in some wage gain slowing to 4.4% per year, and unemployment rate actually went up to 3.8%. That was enough. By the way, did you hear that right? Wage growth 4.4% year over year, and that was good in the eyes of the market. Going up less is still going up, contrary to all opinions. Overall, the feel is becoming more solid that the Dow is done. Now, on to explain the valuations a bit harder with slowing growth. By the end of the day, the month was off to a good start, but not as good as it seemed just a few hours earlier. At one point, the Dow, S&P, and NASDAQ were up all close to 0.75%. By the end of the day, the Dow closed 1/3 of 1% higher, S&P up less than 1/4 of 1%, and the NASDAQ barely kept in the green. Just a quick note on September seasonality. Although the calendar has not always turned out to be right these days, September was the worst monthly return of the year, all the way back to the 1960s. Note that despite that, stocks usually bounce back in October and November, one of the strongest sets of months. Second year after midterms, usually a good time period. Third year of a new presidential cycle, like this one, also very strong historically. The last 3 Septembers have been down, average of 6% during the month. Last seasonal point today, when we come into September as strong as we have, statistics are more favorable. Objects in motion tend to stay in motion. Problem with all of this is that even with the info I just mentioned, September is negative 55% of the time. That doesn't seem so compelling, such a compelling argument to me, 55%. Let's look into this coming week and we'll see what we get. We are free from the Fed meetings until later in the month, the 20th, and there's a lot of eco data between now and then. We also get a slew of Fed heads speaking. This week alone, we get Collins, Bullard, Logan, Harker, Goolsby, Williams, Bostic, Bowman, and Barr. Are there Fed trading cards yet? Overall, eco data is slim, but Beige Book is out Wednesday with high-frequency labor data on Thursday. Keep an ear out for more conversation about the credit crunch that many say are coming. Student loan debt payments start to accrue again this month, and payments are due next month. For now, we're going into a quieter period for a few days. No major earnings reports, though there are some. A bit of the eco data from China, but this is one of the lulls. It can go either way. We will keep all this in mind and come back on Friday with more planning ideas. Remember, this is we must focus on separating the signal from the noise. The problem today is it depends on who you talk to as to what the signal sounds like. As I mentioned in last week's planning video, the scorecard is yours. What do you need to reach your goals? No matter what the next person does, chances are you're not reaching for the same golden ring. Stay focused on what you're trying to accomplish. We'll keep reviewing that in our meetings. One last month in Q3. Let's see what it will bring. Stay in touch and have a great holiday shortened week.